Hi, I'm Jim Jubak and welcome to my YouTube video for Friday, May 27th. If you want more of my stuff after today, you can go to my free site, jubakpicks.com. It's got 3 portfolios, and it's also going to have today a post that gives you more detail about today's topic, and I'll explain a little bit of that as we go along. You could also go to my paid site, jubakam.com. That's got 6 portfolios instead of 3. We do some options and ETFs. You'll find links to those down below. If you like this video, please like it. Subscribe to my YouTube channel. Today's topic, we're headed to a recession. If the Fed is serious about controlling inflation, the Fed doesn't have a very subtle instrument for controlling inflation. It basically has a hammer. And the hammer is interest rates and other things that it can do to the money supply that contract the money supply, which leads to higher interest rates. And the idea is you raise interest rates and you basically hammer on the economy until demand falls, at which point prices start to come down because, hey, there's not a whole lot of demand for whether it's electric cars or bread. The problem is that if inflation is purely a matter of consumer demand, that works pretty well. But I don't think it is this time. Let me give you a couple of examples. Okay, this is an ETF for wheat. And as you can see here, huge spike. This pretty much corresponds to Russia's invasion of Ukraine. And then it remains elevated and then has another spike. And you sort of might want to go, well, what's going on? Well, what's going on is that we've got kind of a perfect storm for wheat. The invasion of the Ukraine means that Ukraine and Russia, which are 2 of the top wheat exporters in the world, aren't exporting a whole lot of wheat. There's a Russian blockade. Looking forward, the Ukrainians are not going to be able to plant very much wheat. On top of this, and that's what this spike is, you've had a huge heat wave in South Asia, in India, which is likely to cause real problems with the Indian wheat harvest. They were talking about a record harvest of 111 million metric tons. Now looks like it's going to be more like 100 million. That's only a 10% drop, but important because they've also slapped on a export ban. And if you look at that in terms of U.S. inflation, the question is, well, the Fed pounding on interest rates does nothing for this supply side problem. I went to my bakery and baguettes, they are now up to $4.40. They make a great baguette, but I can remember when they were $3.95. And what's driving this is the price of wheat. I don't see the Fed having much control over the price of wheat. That's one example. Natural gas, got a huge bottleneck. Russian exports, natural gas prices going up. The U.S. would have ample supplies to provide for the global market if we could get them out of the U.S. economy, but we don't have a whole lot of liquefied natural gas capacity above where we are now, which is basically full. Again, Fed pounding on interest rates, no effect. And the last one I'm going to look at here, another chart. This is for Albemarle, which is a lithium producer. And this is the part that really interests me. We're talking about a huge rise in lithium right now. Here's an example of how delayed the Fed is. That if you basically have a Fed policy which hammers at interest rates and demand then falls immediately, you don't have to hammer on interest rates for too long. However, this is a kind of delayed action. You see this big increase in lithium. Well, this is leading to a big increase in electric car prices. One of the things that's been driving demand and growth in the electric vehicle sector is the fact that batteries have been falling in price. Lithium batteries, which are a major part of the cost of a car. And now you're looking at a situation where Morgan Stanley, for example, has predicted that we're looking at a 25% increase in the cost of electric vehicles because of the rise in lithium prices. And they're talking about, well, maybe that's enough to destroy demand. It's a very long demand destruction process. You put the pressure on, the Fed raises interest rates. At some point down the road, people stop buying as many electric cars because they can't, because the rates for financing them have gone up. And then further down the road, you may have a drop in the price of lithium. And at that point, inflation is under control. It's a long process. It's not going to happen quickly. And I think it doesn't happen without a recession. If you like this video, please like it. Subscribe to my YouTube channel. If you want more of my stuff, including a post that really lays out my thinking about why this is going to take so long to get inflation under control and why that's likely to mean a recession. The example I'll use in that one is diesel fuel. Go to my site. It'll be posted today, Friday, and you can read that and give you more background for this. jubakpicks.com. Find the link to that down below. If you like that, sign up for alerts. You get them every day. If you want even more stuff, including ETFs, like the wheat ETF here, go to my paid site, jubakam.com. Stuff like that is all down below. Thanks very much for watching.